What are dividend stocks? Dividend stocks make regular distributions of cash in stock to their shareholders. Income investors who want cash flow buy dividend stocks, although the best dividend stocks deliver good long-term appreciation in addition to income. Hello top listers, here are the key concepts you need to understand when evaluating the best dividend stocks. Dividend payout ratio. This is a percentage figure which represents a stock's annual dividend amount divided by its annual EPS. The payout ratio rises and falls as a company's earnings and dividend rates change. A reasonably low payout ratio of 60% or less indicates that a company's dividend is sustainable. Dividend yield. This is another percentage figure representing a stock's annual dividend amount divided by its current price per share. Dividend yield gives investors an idea of how much a stock pays in annual dividends relative to its price. Sustained dividend increases. While the dividend payout ratio and dividend yield can inform your understanding of a stock's current dividend, it's also key to find stocks that have regularly increased their dividends over time. Steady growth in EPS and revenue. Dividends are only as healthy as a company's underlying business. Look for dividend stocks that have delivered stable and growing earnings and revenue. Durable competitive advantages. There's no question that companies that have maintained the best dividends for the longest periods have also secured durable, competitive advantages. Whether this stems from technology, barriers to entry, high customer switching costs, or a powerful brand, the best dividend stocks have it. Dividend investing provides investors with steady cash flow over the long term. And when you reinvest dividend income, the magic of compounding can turbocharge your returns. Over the last century, dividend payments account for about 40% of the total return of the S&P 500. The best dividend stocks give you a great hedge against inflation, as they provide both appreciation and capital gains to offset rising costs. From 1991 to 2015, dividend stocks delivered more than twice the return of non-dividend paying stocks. Here's the trouble: not all dividend stocks are created equal. For instance, a good dividend cannot make up for an underperforming stock. Similarly, a high dividend yield could be a trap that covers up erratic payouts, poor performance, or minimal growth prospects. Methodology. Best dividend stocks is based on 9 key measures. To be included in the list of dividend stocks, each stock must have demonstrated 1. Long-term dividend increases. The company must have increased its dividend for at least 10 years in a row. 2. Decent annual dividend growth. The annual dividend amount has increased by at least 5% on average over the last 5 years. 3. Sustained earnings growth. EPS has increased more than 8% per year, on average, over the last 5 years. 4. No unprofitable years. Earnings must have remained positive for at least the last 6 years. 5. Elevated current dividend yield. The current dividend yield must be at least 1%. 6. Decent overall shareholder yield. Shareholder yield must be at least 1%. Shareholder yield includes dividends and share buybacks or issuances. 7. Outperforms the S&P 500. The stocks must have outperformed the S&P 500 by at least 1% per year, on average, over the last 10 years. 8. Share price stability. Over the past 10 years, the maximum stock price decline allowed is 51%. This limit helps exclude volatile stocks. 9. Basic thresholds. Companies must be listed on a U.S. stock exchange, have a share price of at least $5 and see average trading volume of over 500,000 shares per day. Remember, before you purchase any of these stocks, do plenty of research to ensure they align with your financial goals and risk tolerance. Thanks for spending some of your valuable time with us today, top listers. We're so glad you did. If you enjoyed this one, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe. See you tomorrow.